Welcome to the Cyber Business Podcast, where we feature top founders and entrepreneurs and share their inspiring stories. Now, let's get started with the show.
Matthew Connor here, host of the Cyber Business Podcast, where we feature successful business leaders, top law firms, green energy companies, and more. Today, we are joined by the managing directors at Mercato Partners Traverse Growth Fund, Joe Kaiser. Joe, welcome to the show.
Well, thanks, Matt. It's a pleasure to be here with you.
Great to have you. Before we get too far in, a quick word from our sponsors. This episode is brought to you by cyberlinks.com. That's cyberlynx.com. Cyberlinks is a complete technology solution provider that ensures your business not only has the most reliable and professional IT service, but also has the right cybersecurity solution to ensure your business stays productive and safe. You know what? Let's skip through all the other. I'm going to shorten this for you. It's a long one. I was like, why is that so long? I got to talk to somebody about that. That's too long. All right. And now back to our show. Joe, for those who aren't familiar with Mercato Partners, can you give us the Mercato Partner elevator pitch?
Oh, my pleasure. So Mercato Partners was founded in 2007, and we have always been and continue to be the growth equity capital that's focused on the interior of the United States. So while there are amazing companies founded in places like San Francisco and New York or Boston, time has shown that there are amazing companies being built every day in the heartland of the country. And that's where we focus our time, attention, and dollars.
I love it. I think that there's a lot of money, obviously, in Silicon Valley. And I think people often think that's where you got to go start your tech startup. So I love that there are a lot of private equity firms now thinking differently, that you don't necessarily have to. So that brings me to the Mercato Partners. You have multiple funds, but you're the managing director at the Traverse Growth Fund, right?
Indeed, Matt.
All right, and congratulations on closing your fourth fund now. This $400 million, I think it was.
Number 4, a lucky 400. That's right.
That's fantastic.
We're excited. We're excited to continue our mission.
So tell me, what are you going to do with all that money?
Go to an island. No, I'm kidding. Just continue what we've been doing for the last 16 years. Again, there are amazing companies. And I think with the distribution of talent that came about as part of COVID, and there was a migration afoot before COVID from these coastal areas to the center of the country. But COVID certainly accelerated that. And I think the reality is, once people figure out I don't have to live in a 500 square foot apartment and have a 2-hour commute and can have grass in front of me, like, this is pretty amazing. I don't want to go back to that. So it's not for everybody, but there is a significant number of founders that are would-be founders that move to the interior of the United States. We've seen spikes and business starts in cities around the country, not just concentrated on the coast now. And so, yeah, we're pretty bullish about what the future holds, particularly from an enterprise technology standpoint.
I love it. So interestingly, I saw just recently that somebody started an app for people in San Francisco to report when they see, that somebody has taken a number 2 on the street. And funny, have you seen this?
I have seen it physically. I have not seen the app.
The app is hysterical because within hours, the entire city on the map in the app is just, it's all brown, the entire city. And so you zoom in and then it's just ridiculous.
Pun intended.
Yes, exactly. So it's funny because I think a lot of people are seeing, especially since COVID, I mean, San Francisco's had a lot of real challenges, and you want to be there for the tech. You want to be there for, the great talent, capital, everything all in one area. But with the skyrocketing rents it's crazy.
Well, so if we take a step back and from a historical standpoint, why have these concentrations of technology happened? It goes all the way back to, well, probably from the dawn of mankind, but most recently, the Industrial Revolution. That's where this notion of water cooler talk came from. You had intellectuals, you had industrial magnates and really smart entrepreneurs all getting together in coffee shops and talking about what they're working on and what they're thoughtful about and sharing great ideas. Fast forward to today, that's done in social media. And so it doesn't necessarily require, or Zoom, like we're doing now, it doesn't necessarily require to physically be in the same coffee shop together anymore. Now, you could say, and I would argue, there are certain things like cutting edge AI or cutting edge biotechnology where it probably does make sense for those 10 people to be in a lab together, for instance. But those are super edge cases as opposed to 99% of startups that are happening right now and companies that are growing hundreds of percent per year. They can be fully distributed as long as that work and that thought sharing process is intentional. The workforce can physically be anywhere.
I love that. So is that what you're seeing? I mean, obviously you guys have a good number of companies that you've invested in, all in that same vein and area. And are you saying that the majority of these startups, it's all kind of far flung? They're all basically mostly remote and it's working great?
So there's a couple pieces here. I think what we're seeing is hybrid, not fully remote. I think whether you're in the Bay or in Chicago, the notion of being a hybrid workforce is what is, I think, the commonplace today. But the other thing I would say is if you're building a Bay, so the question, why do we focus on the Midwest? And it's not just because we share a passion for deep dish pizza. It is. It's also because if you're building a company in the Bay, you're solving for one personnel problem. If you're building a company in the interior of the United States, you're solving a 180-degree different problem. So by that, I mean, in the Bay, there are people that spend the entirety of their career at the startup stage. So they are very accustomed to working with complete unstructured workflow. In terms of their tasks. There's not processes in place, and they are absolutely good with it. The challenge for the founders and the board members and those people that are building those companies is those employees historically have been very fluid, willing to go from one company to the next. So if there's perceived weakness in the value of their options, they're going to go to the next startup, which is probably the next building over or the next floor up. You contrast that with the Midwest. The difference is 180 degrees. Again, you have just as talented people coming from elite research universities, cutting their teeth and being incubated from a talent and leadership perspective at Fortune 500 companies. And then the startup comes around and they've just never worked in an unstructured environment that doesn't have process in place. And so in the Midwest, we're not trying to solve for how do I keep everybody together and focused on my company. In the Midwest, for example, or the heartland of the country, the mentality is very much the name on the front of the jersey, not the name on the back. But you have to help them understand how do I work today without process and still accomplish the goals that I've been asked to achieve, plus start to build process in. So as these companies scale, they ultimately do have process in place. So once you get to that 200th employee, it is there. So I think it's just it's a different paradigm that we build in versus a coastal startup, but it's fun and just equally challenging, but different.
I love it. I mean, so let's take, any one of the number of companies in your portfolio. At what stage do you guys get involved? When what's the ideal size and position?
It's a great question, Matt. I would say, what we try not to do is give founders a lazy answer by, revenue needs to be X, or you need to be profit Y, or margin needs to be Z. How we think about it is we are really good at helping companies scale. We are not good at helping companies find product market fit. So we want to see that these companies really understand who their customer is, how their customer wants to be engaged, and that their product or service is actually solving for what that customer thinks they're buying the product or service for. So having said that, what we want to see is just an absolute growth rate, of course, plus, again, that product market fit is often exposes itself in either a net retention ratio figure or a repurchase rate if it's inventory, if it's a physical good. So we're looking for companies net retention ratios of 100% or more, repurchase rates, seeing customers coming back again and again to buy that physical product. So that's criteria one. And then criteria two is unit economics. So while we're very comfortable with companies in a cash, and not going to call it cash burn, I'm going to call it a cash investment scenario. If the unit economics are profitable, meaning that the incremental cost to provide this product or service is less than the price I'm getting paid for it, in our mind, then the company is at the growth stage. It's on a trajectory towards profitability. And so that cash investment is both controllable and intentional. And so for us, that's a hallmark for a growth stage company.
Love it. Smart. So you say that you're really good at helping companies scale. How do you do that? What's that look like?
Well, first, I think it starts with trust. And because we're a minority only investor, meaning, we're going to invest X dollars, we're going to end up owning 10, 20%, but not more than that. So we don't we don't have contractual rights to come in and say, Matt, I am now in charge of your company. You work for me. You're just the day-to-day person. This is exactly the opposite. Founders and CEOs bring us onto their boards because of our experience in understanding how to solve this very problem. They can raise money anywhere, but how to scale where they are that's the $64,000 question they're trying to solve. So it starts with trust and showing these building a relationship often for a couple of years and showing these founders we actually know what we're doing. And oh, by the way, we're good people that align with your culture. We're going to be co-builders, not disruptors to what you're doing on a day-to-day basis. Because as we all know, this is a 3 to 5, sometimes 7-year journey. And the last thing you want to do is bring in a quote unquote partner into your business that is frustrating, toxic, and disruptive, as opposed to someone that actually is value add and someone you want to work with, someone you want to engage with, someone that you will be your first call when something gets hard or tough. So that's the qualitative part that we try to bring to the table, and then the how to. So we have a value add initiative here, and we focus on a couple of areas. First is go to market. We try to help companies scale their efforts from a sales standpoint. So as they go from say 5 or 10 million in ARR revenue to 25, 50, 100 million, obviously the team dynamic of that go to market motion is different and much, much bigger and often more complicated. So we help build, what's the org chart look like? What's the ratios of different functions inside of that go-to-market look like? How do I think about the shape and dynamic of my sales funnel? How does marketing begin to weave its way into creating top of the funnel opportunity and brand awareness? And then how does that handoff, and what does that handoff look like from that initial sale to customer success and to retaining and maybe even upsizing that customer account? Those are the types of things from a value add standpoint that we really focus on. And then just the team building dynamic. Again, like if I'm at 10 million in revenue, I'm probably say 50 people, maybe less. As I go to 25 million in 12, 18, 24 months, that headcount dynamic changes significantly. And then the customer demands, as you go from that early adopter part of the curve to now getting more of the mainstream, the expectation that customer has from a service standpoint, engagement standpoint, bugless experience, that all changes and evolves in helping companies think through what does the team need to look like and the processes need to look like to satisfy not only that early adopter, but that midstream customer as well.
Well, I like that because I think it's Warren Buffett who said one of the most important things that decisions you'll ever make is who your partner is. And I think at the time he was referring to young kids and who they're choosing as a life partner. But I think that on the business end, that's so true. I think it's just as important. You bring on the wrong financial partner, you got them on the board, and now, as you said, if they're a toxic fit, they're toxic. Their culture just doesn't mix. You've come in, they've spent a bunch of money. You got to try to unwind that whole thing, get them out of there. It consumes a lot of time and energy and resources. So I think finding that right partner who is the right fit is just of paramount importance. So how do you go about the same thing? Is it a long process for you to kind of go through and decide, oh, we like goal zero. They're that it's the right fit. They're the right people. I like how they think. I like how they work. Is it how long does that usually take to kind of work that out and decide, oh, we'll marry you. This is great.
Yeah. Well, Matt, I think it's a great parallel because if for the majority of us, ending up with our life partner, getting married and someone that's truly our life partner isn't really a process. It takes time to meet that right person, get to know that right person, trust that right person, and then have that, yes, I'm ready to commit and stay committed. I think it's very much the same here. Like if my advice to founders in this regard, it's if money isn't the only thing you're solving for, valuation and money aren't the only things you're solving for, and I highly suggest it not be. You have to get to know investors over a long period of time. So people's true colors shine through and you can see what would this working dynamic actually look like. If I miss my number, or if I have some flare up inside of this company, am I going to be comfortable picking up the phone and calling Matt and saying, hey man, this just happened. Here's how I'm thinking about working through it. Does that make sense to you? Or are you going to have like nails on the desk? Like, this is going to be awful. I just need to get through it. If that's your mentality, no matter what the check size is, easy for me to say, I appreciate, but no matter what that check size is, it's not that relationship, that partner building or a business building partnership that you want to bring into your boardroom.
Well, so let me ask you. So before I started Cyberlinks, I was in the military intelligence, and I was in Japan. Interestingly, they taught me Mandarin Chinese, but they put me in Japan. I don't know if that was a racist thing on the Army's part. They're like, it's the same. Is it? But in any event, there I am in Japan. And so we had these counterparts, these Japanese counterparts. And so there was a lot of whining and dining in the Japanese way in order to get comfortable with somebody before you ever even did business, even though the relationship had long been established between the countries and the organizations. The individuals still had to go through and feel each other out. Because at the end of the day, if my counterpart didn't like me, they're not going to give me this stuff. They're just not. They're going to find another avenue to if they're passing it off to the US. They're going to find another avenue. It won't be Matt because they don't like Matt, right? So
yeah,
so you go through and you drink a lot of you do a lot of drinking, heavy drinking. They can drink a lot for being so small. These guys are like professional drinkers, and I'm a big German and Irish guy. I've got ancestral. I should be able to hang, and I did just fine. But boy, can they drink. So you go through and you do their thing and you do a lot of bonding in their cultural way. Great. And then, then you've established a relationship personally and then professionally. So I'm kind of curious, do you have obviously it's not going out to, to karaoke bars and and whatnot, but do you have a process whereby hey, look, I like to have a few dinners. I like to meet the family. what is it that you do? Do you take them, I don't know, skydiving, be like, see how they handle this, that's how we bond, life, defying death. What is it that you go through? Or is it simply, you kind of know over a handshake in the boardroom? What is it for you?
Oh, Matt. Well, first of all, I'm not smart enough to have some sort of structured personality test, like jumping out of a plane and seeing at what altitude you pull the rope. Um, I'm just not that smart. But I think,
Yeah.
like anything, it's meeting people where they are. What are you comfortable with? But it has to, for me, and not all investors think about it the same. But I would say for me, it's I have to know that we're on the same wavelength. Like we have a trust and a bond together. By the time I, ask my CFO to press the button on the wire, you and I have a bond. So it's not, I'm pulling you to share with me. I think if that bond doesn't exist, then what happens is the truth is never shared until we have an oh shit moment. And then at that point, it's too late to fix anything and solve things without without it being catastrophic. So that is the thing for me, Matt, is if we can build whatever it means, if it means, having $100 bottles of wine together every, 30, 45 days, great. If it means riding horses together, great. If it means racing cars together, great. I don't really have a preconceived notion what that is, because I want to meet people where they are and show, because that's who I am. I want to be in, you're welcoming me into your domain, into your castle, not vice versa. And in fact, I think that has long been the problem with the venture industry. As I think about what I do as a service, right? And so it is a highly risky service because we're deploying lots of money on behalf of pensioners and insurance companies and the like, but it's still a service. And so if you just take away this notion of VC and you just think service provider, what other service industry can the service provider get away with telling the customer, hey, if you want me to provide the service, you need to come to me. You need to convince me that you're the right customer for me. And then I may or may not even call you back. But if I call you back, I'm going to tell you how things are going to be. And I'm going to tell you how you should be a good customer. Like, extract the notion of VC and just say service provider. That is fundamentally flawed. And so I think that at Mercato, we are trying to re-engineer and re-architect the CEO, the founder experience. We're not trying to remove the granularity of our filter or our investing process and say one come all. That's definitely not true. But I do think that you can be a very good actor and a good ecosystem partner and collaborator without the arrogance that often comes with the business card of VC.
I love that. I mean, that's so well said. I mean, everybody, thinks of it in those ways. Oh, these great leaders, these great investors, they have those tests and those things. And to your point, it's kind of bullshit, right? You should be going, you're there to help their company. So you should be going and fitting in. And hey, do you fit in with them? Horseback riding. If that's what they do as a company, that's their group thing. That's how they bond. Yeah. And you're like, oh no, I'm not a horseback. Okay, maybe you're not the right person for them. Maybe it's not just because of horseback riding, but that's, indicative of so many other things that might not be a great partner fit, right? You're not going to marry somebody who doesn't like to do the same things that you do. Maybe you do. I don't know. But you might have a better time if you kind of both like the same things. So I think that's brilliant. I think that's great. So, wow, it makes me want to get, start a business and be like, hey, Mercato Partners, we're focused on enterprise. Let's go drink some wine.
Well, again, Matt, from our vantage point, it's just keep it simple. Like I'm not going to make your business a great business. You're going to do that. Now, are there moments where I'm because of just pattern matching and been there, done that, I might have a vantage point of what's right in front of you, that because this is your first rodeo, you don't know it. Again, because in the interior of the country, there are certainly successful multi-time founders, but most founders are not. So the value that we bring is helping these founders see, like, if these signals, these early signals from funnel weakness or customer complaints, those are precursors to the next thing. So how do we think through the next thing? Or the CEO says, hey, I experienced this quarter. This is how I'm thinking about solving for it. And we can say, I've seen this play out 10 times, and what you're thinking hasn't ever been successful. So maybe tweak it just a little. That I think that's the value. But if you don't trust me, then we never get there.
Yeah. And I think it's funny because maybe it's just kind of the popular culture for the last, I'd say 10, 15, maybe 20 years. There's been so much media coverage about VC and how, oh, you've got these big VC firms come in, they kind of change the culture of your startup and blah, blah, blah. And so I think a lot of people have gotten the wrong idea about what an investment partner can be. And I think that private equity has been lumped in with VC incorrectly in a lot of people's minds. So you get a lot of these founders who aren't from the finance world, and they think, oh, VC, private equity, it's all, kind of cold money.
It's all
that's just going to come in,
exactly.
rip out the young CEO startup guy, put in, somebody who's got experience. They destroy the culture, they destroy everything. And at least I'm finding, and it's kind of been my observation, that so many people fail to see what that private equity really is, as you're describing it. It's smart money that's been around, that can help you see things that you haven't seen. They don't want to run the company. They don't want to replace you. They want to help you make both of you more money, doing what you do. And for whatever reason, and I gotta think that it's the media, but is it not like big media doing bad things? But I mean, just there's been so much media coverage for all these unicorn startups in Silicon Valley, and you hear the VC story. Do you think is that your perception? Is it like, oh yeah, we see a lot of that and we have to kind of re-educate people that private equity, or the people we talk to, they've already learned that, obviously, and now they're talking to us. How does that work for you? Is it one of those things you got to combat, or they're beyond that?
Oh yeah, no, we definitely have to combat it. I think, to your point, because a lot of multi-time founders have had that experience where they have had that sharp-elbowed, smartest person in the room kind of personality in their boardroom before, and we have to prove that that's not us, and that's okay. That's totally fine. I'm up for that challenge. But it is absolutely something that we have to contend with and dispel. The other thing I think that we have to dispel is what is most important when you take on investment dollars. If you're the founder or CEO, it's not the name of the investment firm, it is the partner that you deal with. That while pick the name of the firm, they have decades of incredible track record. It is the person that you're dealing with that's going to be either the bane of your existence, or this fantastic partner that enables you or helps you unlock the value of your business to go from where you are today to something that you're envisioning in the future.
So let me ask you. So then, how do you find your next, investment? Do you have people actively going out and looking for opportunities, or do opportunities come to you? Combination of the two? How's that usually work? Because I'm thinking, in terms of a business, I need, looking at clients, what's our client acquisition strategy? So what's the Mercato, investment acquisition strategy?
Yeah, our customer acquisition strategy. Yeah. It is, because we invest in the heartland of the country, we do everything possible to embed ourselves into these communities and really become the default local option for those founders and CEOs. they may want that coastal experience. They may be in an industry where it makes a lot of sense to have that know-how that XYZ investor can bring to the table. That's fine. But if it is, hey, I want that local partner that is a cultural fit, that's what we want to be. And so as a consequence, we are very strategic about how we go about embedding ourselves in these ecosystems, and having founders tell other founders, oh, when you get to that Series B or Series C, make sure one of your first 5 calls is Mercato. Or having that early stage investor that's on the cap table in the boardroom and is talking to her founder or CEO, hey, like, we're 18 months out from raising that Series B or Series C. Let's give Mercato a call and walk them through the business and start building that relationship. So that's part of it. And then the other part, we try to not only host events and have fun with people in the communities, but we also try to bring content. Again, I go back to so many of these, not only founders, CEOs, but these early employees are brilliant, but oftentimes they've worked in big companies. And so now they're a part of a 25-person company. And how do they think about X, Y, or Z function? And so we try to bring that know-how in the form of content, often like presentations and the like, to these communities. Again, meeting the people where they are and sharing our best practices and what we've seen really work. And that helps demonstrate what we can bring to bear ultimately.
I mean, Middle America, that is a lot of area to cover. So when you're talking, it's one thing if it's, we're Salt Lake City. Great. Easy to kind of establish and be the local option there. But to be the local option for, I don't know how many, square miles that is, but it's a lot. That's a big neighborhood to be so is it simply a matter of, do you have like reps who, or people who, how do you carve up that large geographic area and say, oh, we're going to tackle this? Or is it not really so kind of organized and strategic like that? You just kind of get yourself out there and network. Is it?
Yeah. Matt, I think my wife hopes AI solves this problem in some way, but today, I think Mercato does our very best to keep Delta and Marriott in business. It is just boots on the ground, shaking hands and meeting people. A lot of firms do this like scout model or business development rep model. That's not for us. I think, again, our value is you knowing me. If you're going to invite me into your boardroom and allow me to be on your journey for 3, 5, 7 years, then the relationship is with me, not the brand on the front of the door.
I love that. Great. So you do a lot of traveling then.
Indeed.
That's fantastic.
I try to be here in Utah at least a couple times a year during the winter, especially to enjoy the local surroundings. But otherwise, yeah, I spend a lot of time on the road.
Wow. Yeah. So that's how do you balance that on the personal side, with your wife? Is that does she travel with you a lot? Is it one of those things where she likes her alone time? If you're only in Utah a couple times a year, that's got to be challenging. How do you balance something like that?
Oh, my wife is a saint. There's no two ways about it. She's a nurse practitioner. She works equally hard. But she's, she is very understanding and appreciate. She's also a Midwesterner, and she buys into the mission that we're on, from building ecosystems and enabling, at some level, enabling hope in communities that otherwise don't have it today. So that's what I think she's on board with what we're trying to accomplish. And yes, we definitely have a point of view of trying to spend as much quality time when we're together as possible.
That's great. Well, I think it helps to have that mission, and I think far too often investors tend to be kind of cold and calculated with their money and lose lose track of a mission or not have one at all. If the mission is just make as much money as possible, so be it. And I might be wrong, but I think I've seen, so many where it kind of seems like the mission is something that they slapped up there because they had to say, oh, we invest in XYZ to get money, but they didn't really truly have some burning mission that they were trying to accomplish. But in talking with you, it's really clear that your mission, is not just to make money. You really want to help build out and help communities in middle America grow and execute and bring more jobs and more resources and make things better there. So I think that's just so important. And there are it's fun. I like getting to interview people because you get to see those differences. So many people are just like, yep, this is a job. And okay, cool. That's fine.
Yeah.
It's a job. But when you meet people who they're on a mission and so that helps bridge, even personally, it gives you a reason to get up and have, if you're going to spend time away from your wife, then now you've got, at least you're doing it to accomplish some mission. And I commend you. I think that's great. And I don't think you see it often enough.
Well, Matt, I would say they go hand in hand. Our excellent returns, frankly, that we deliver to our LPs and our drive towards our North Star, they go hand in hand. PitchBook, which is a data service for private equity, just named Mercato one of its top 10 growth equity investment firms. So our returns are definitely extremely competitive in this space. But I think the reason that they are so competitive, or one of the reasons they are so competitive, isn't because, to your point, Matt, isn't because we're trying to make the last dollar. It's because we're embedded in building not only great companies, but great ecosystems. And it's just a flywheel effect, right? So, and like a lot of great companies that truly buy into the mission of why they exist, it's just galvanizing for the employees and for the people that we work with, that orbit around Mercato.
I love it. I mean, it took me a while. So in my company, it took me a while to finally realize that. I didn't even realize why I liked it so much when I left the Army. So I knew, early on that I wanted to join the Army and I wanted to defend my country. I didn't know exactly what I wanted to do after, but I always knew I wanted to be able to say, I did that. I defended my country, and it's no matter what I did, I just always wanted to do that. And I was always like a kind of larger guy. So I always like protecting the little guy. So I always liked that. And so it worked for me. And then when I got out and I started Cyberlinks, it took me years to realize the thing that I loved about it was that we're defending US businesses from all of these threats, foreign and domestic, that are actively out for their money and their way of life. And so it's a new way for us to defend the country, but now the people in it, their livelihoods, their day-to-day everything, because I think business is very personal. It's how you provide for your family. And
yes.
What could be more personal than that? So being able to help people defend that. So that once I realized that, I was like, that is why I love doing this, because we're doing that. We've had, and it just kind of, and it's always kind of bled through with with the other guys I work with in the company, and everybody kind of gets that. But it took me so long to realize, because I didn't start at well, let's have a mission statement, let's draw out a mission statement, or have to justify it to anybody. I was like, okay, great. I started my company. This is what I want to do. And then it just took me a while to realize that's really what's been driving me. And I've said it a million times and everything, but for whatever reason, it took me a long time for that to click. And then once I did and had a real reason for that, now we have a mission and a passion. And now it's great. It gives it real purpose versus something we just slapped on the wall and have everybody recite. This is our mission statement. Okay. Sure, it is.
Totally agree.
Yeah.
But it's the spark, right? It's that spark that causes the piston to keep turning. And you don't need it when times are easy, but when times get tough, it is that spark that keeps you fighting.
I love it. Joe, I think I could do this all day.
Likewise, Matt. You're awesome.
This is fantastic. Anytime you have anything you want to talk about, you got a new investment you're excited about, you want to come on the show, I'd love to have you talk about it. Anything. So this has been fantastic. Before we go, can you tell everybody where they can find out more about you and Mercato Partners?
Pleasure. But first, Matt, let me thank you for your service to our country.
Oh.
That was such a sacrifice. So thank you. For us, it's really simple. MercatoPartners.com. You can find me on LinkedIn. I do my very, very best to respond. My email address is in my LinkedIn contact info, but it's just J Kaiser, Kaiser at MercatoPartners.com. Would love to hear from founders. It is what gets me out of bed every morning.
Awesome. Joe, again, thanks for coming on.
My pleasure, Matt.
Thanks for listening to the Cyber Business Podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.